All right, everyone, welcome back to the Technical Thursdays here, where we're going to take a look at a chart idea, a chart process, something that I'm seeing in the market currently that I can use, and I think I can teach a little bit of an example from. And this one is very telling, or could be very telling here on the S&P 500. We're just going to do a little bit of candlestick analysis. I think there's going to be a lot of these that are going to be, what's the idea behind candlestick analysis? Yes, you can learn all the Haramis and Mizorus and all these different names and all these different terms. But really what we're doing is we're looking at the shorter term candle. Now we have about an hour and a half left in the day, so this certainly could change by the time you guys see this. But what I want to talk about is what I'm seeing here so far on this particular candle, and call it whatever you want. But when you're looking at a candle, you're basically just seeing what is happening on a lower time frame. So we're here on a daily chart of the S&P 500. You can see we gapped up today into new all-time highs. And the one thing I want to note right away is look how close the open is to the high of the day. The bears could almost, or the bulls so far could get nothing done into today. And then we just started to sell, 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 and we're almost filling the gap here. We got under this prior day's action right here. So when you see a candle like this, it starts to get a little bit worrisome. But what I want to highlight is that these can happen, and then you have to look at the context of obviously what happens next, right? One candle is not a pattern. So, for example, right here, we had pretty much the same thing, except a lot higher wick. We had a gap up, and then it sold to make right at the close here. Here we had a bit as well. We opened up on the day, and then we sold down, and this caused a little bit of a down move. So you're not saying that, oh no, this is the end of the days, I'm going to short it. But it starts to add one level of what could be a multi-level thought process on potentially what's going to happen in the market going forward. So for me, it's Thursday right now. We're doing this on Thursday. I'm watching this candle, and this candle's closed very closely. And then I'm going to see what happens tomorrow. If we just gap up and negate this candle and just rip to new highs, it was a nothing burger. But if we start to continue and we start to push down here tomorrow and we start to make new lows, not necessarily below these lows, but definitely below yesterday's low, and we close down there, that gets me a little bit more worried because it says, yes, so we gapped up into new all-time highs and sellers just came in right away and they pushed us down all day today. And then if that selling continues tomorrow, for me, that's going to be a potential reason to take a short trade. And how I would do that, because I'm pretty much a long only trader, I do a lot of trading in retirement accounts. There's a lot of inverse ETFs, right? You can do SDS, which is an ultra short. You can see this is just the flip chart. You can go SQQQ. There's all types of different inverse ETFs. So find the one that is suitable for your account that you're allowed to trade in. If you're looking to trade long only, the benefit of these is that because they're leverage, you can get 2 times, you can get 3 times. I think you can get 4 times leverage ETFs now. Uh, they're very buying power efficient. So I have a lot of longs on right now that I'm up good on. It's been a very good month over at Stats Edge Pro. You should come check us out. When I want to, and I want to use a small amount of capital to potentially put on a hedge in a discretionary type way, I will use these inverse ETFs because if I'm right and this thing moves, I'm going to get double that return of being right. Also means if I'm wrong, I'm going to get the double the risk against me, so I can just outlay less capital. I can take a little bit of capital I have remaining. I can take a speculative bet here that this thing's going to reverse. I can take that trade, and then if it does, and I get stopped at some positions, I'm hedged a little bit. If I'm wrong, I'm still long a bunch of positions, and it's fine. So it doesn't mean I'm going to hold that and I'm going to do that all the time. But again, if we close like this now and we move there tomorrow, it's just a little bit of a candlestick analysis to say, hey, people were waiting for this new all-time high to sell. If those people continue, maybe we have a little short on our hands. So again, if you like these shorter videos, let me know. Hit the like and the subscribe and the retweet and all of those type of things. And I will see you guys tomorrow or on the weekend for our Friday market finale.